Analysts warn that Singapore may be in for weaker economic growth going forward as key exports ease in September. Non-oil domestic exports rose 3.1% on year, but it's a much slower pace compared to the 11.4% growth that was recorded in August. Leisha Rodney reports.
Fewer shipments left the ports for Singapore's top 10 markets last month, mainly due to a double-digit decline in exports to China and Hong Kong. Economists say China is Singapore's largest trading partner, and its economic slowdown is hitting Singapore's NODX hard. But that's not all.
I think globally, the consumer demand is weakening. A softer external demand essentially is due to a confluence of factors such as higher inflation, higher interest rate. So both essentially will dilute or weigh down on the consumer purchasing power and demand.
September's non-electronics exports have held the fort, thanks mostly to pharmaceuticals and measuring instruments. But the growth of 7.6% is a fall from the 16.9% growth seen in August. Electronics exports, on the other hand, shrank 10.6%, extending the previous month's 4.5% contraction. Integrated circuits and disc media products driving the decline. Analysts say it's the end of the line for 2 years of strong performance from the electronics sector.
Because of lockdowns, restriction, heavy buying and replacing old products items, whether it is for cars, whether it is for the household, or whether it's for businesses side. So I think that side is more or less completed. You're essentially going forward, not seeing the kind of demand for replacement of a new product as much as before. From the orders flow side, chip manufacturers are also flagging softer demand as well.
On month, Singapore's NODX stayed in negative territory. It shrank by 4%, extending the 3.9% decline in August. And with no end in sight to ongoing uncertainties like the Russia-Ukraine conflict and US-China trade war, analysts expect Singapore's exports to continue on a downward trend.